another weekly market breakdown, and today we're going to take a look at the forex pairs, which is the dollar index, the Usdcad, GBP, USD, Euro USD, USD Jpy, USD CHF, and then someone asked me to take a look at Eurnzd as well. Now, if you're new to the channel, a sub would be appreciated because I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to discuss in my next video. Now, before we get started, it's very important to understand what kind of fundamental data we have coming through this week, so that we can align our technical analysis with the fundamental. But also, if we do get into any of the trades that we might be able to take, that we do keep up, just keep our eyes open for this year as well. So we do have the FOMC minute meetings. So we know whenever whenever we hear about the FOMC meeting minutes, it's always talking about inflation, and it's just always what the current status of the economy is and all that stuff. On Thursday we got the prevalent GDP. For those of you that are not aware with what the prevalent GDP is, it's basically there are three versions of this report that gets released per month, and basically it measures it measures the economic activity and the primary indicator for the economy's health, and it is normally made up of a couple of things. Like there's a couple of things: unemployment. So it's a collection of all the news events that is sent out throughout the course of the week, and then that kind of makes up the country's GDP there as well. Then we also got the core PCE price index that's being released on Friday for the dollar index. And also, if you don't know what that is, it's basically the index used to measure price paid by consumers paid by consumers for goods and services without the volatility caused by movements in food and energy prices, to reveal underlying inflation trends as well. So that's basically what it is. That's the core PC. And the good thing about this is this data is only getting released in the second half of this week, which is going to give us some good opportunities to make use of this market here as well. Now, as always, we need to start with the dollar index, which is the main index for the pairs that we are going to look at trading. Starting on the monthly time frame, what do we have? Firstly, a massive impulse to break above the strong level of resistance. Then the market is, we know, due for a correction, but not the kind of correction that we're looking for. The market had pulled back to this previous level of resistance, now testing it as support. We cannot measure this with our Fibonacci level because this is purely based off price action. Now, the market is currently testing support. This is an indication that we could potentially, now listen to me properly, potentially see a pullback to the upside, because the stock market is also heavily oversold. With the dollar index expecting a pullback, there is a possibility that we could potentially see a deep retracement. Now, here on the weekly time frame, we can see this was the area that the market had created. But if we just come down over here, we can see how we have this massive impulse, and after an impulse you expect a correction. Now, if you take your Fibonacci from the low to the high of this impulse, the market's currently testing the 0.382, which is an indication used to tell us that the bullish momentum on this market is quite strong. Now, we could see a rejection from this level over here, because we know that we had some positive data released for the dollar index last week, which further back up the claim that we can expect the market to pull back. The market had started moving in a downward trend over here. We can see how the market printed support, broke below that, tested it as resistance, printed new support, currently testing this, creating an equal low. We can expect the dollar index to slightly increase in value before that continuation to the downside. But because we expect the dollar index to further increase in value, to go and hit and take out that monthly high of 105 or 110, it's 100 and it's going to be 106 where we could expect the market to get to next. The bullish momentum on the index is still expected. So we can see how the market is currently, from a daily perspective, is currently creating this equal low. Now, when the market creates an equal low, you do expect a pullback. Now, there is a high possibility that we can expect the market to pull back before a further continuation to the downside. However, my bias on the dollar index will remain bullish, because we expect the Federal Reserve to continue hiking that interest rates. Now, the pullback over here is expected. We could potentially see a liquidity run over here. The market could pull back like we see over here. We have that massive wick. That all depends on where the daily candle closes as well. However, I would probably monitor price action around this area, because if we do get a break above that, then on the continuation, the dollar index could once again be sent back to exactly where it came from, which is that previous level of resistance, and then go to 106. Next up, we've got Usdcad starting on the monthly time frame, same type of price action over here. Market broke below this very strong level of support, back to tested as resistance. The market is stuck between this level of resistance, broke above that, tested as support. So we can see how the market is now stuck between support and resistance there as well. But this is a monthly candle, so there's still an opportunity for us to look for those short-term opportunities in the market. Weekly time frame, what do we see? Now from a weekly perspective, the market had printed above the strong level of resistance, back to tested as support, printed a massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low. Now we can see we do have a 0.50 pullback over here, but the market had broke below this 38.2, and it's testing this strong structural level that we have over here. Now we are going to see what we have on the daily time frame. So we drop down on the daily time frame. What do we see now? From a daily perspective, we can see that the market had been trading sideways for quite some time. So this is kind of the price that the market had been moved in, came down, but we still had not have the breakout that we are looking for. If we are looking for a short-term buying opportunity, I suggest that we do wait for, I'm just going to take that wicks into consideration, because that's the price for the market had potentially a pullback to. So what we can expect from this market is we can even expect a pullback there, because that level over there is also acting as a structural level, because you know structures create when the market prints a red candle next to a green candle. The market broke below that structure. There is a high possibility that we could see the Usdcad pullback slightly before possibly continuing to the downside, because I don't see that happening, because of the dollar index strength that is still expected to increase. We can definitely expect this market to potentially pull back to that level, then there, and then start that continuation to the upside. In doing so, the market will then complete this W formation, which is considered a bullish pattern from a technical perspective as well. Now, can we buy this market? Yes, we can. To where this would probably be the first line of defense, then a break above that would give us a further indication. Next up, we've got Gbp USD that's been quite struggling this month, and we know that the Swiss franc, not the Swiss franc, sorry guys, the pound has got a higher possibility of going into recession there as well. Price action here is very easy to read. We can see the market is currently printing an equal low, definitely a pullback expected. Then we can see the pullback here. Market printed a strong level of support, breaking up below that, because we expect that pullback, but we also still expect this continuation to the downside from a weekly perspective. What do we see now? Here on the weekly time frame, we have this massive impulse. After an impulse, you expect a correction, but not only do you expect a correction, because if you look left, you can see that the market have structure that is about to face there as well. But if you take your Fibonacci here from the high to the low of the impulse, what do you see? Firstly, the market once again is just has just poked his head above the 0.382 again. As soon as the market hits the 0.382, you can start expecting that pullback. Now on the daily time frame, what do we see? Now from a daily perspective, price action is quite simple to read over here. We can see that this is the previous level of resistance that the market had created. The market also printed resistance, broke above that resistance, and all of that resistance is now acting as support. There's a high possibility that the market's going to pull back, hit that level, and then the best thing we can do from there is just monitor price action and see if we do want to continue higher. Again, with the buyers being bullish on the US dollar, I don't think the market is going to break above that level. But as traders, we have to be reactive and not predictive, and we need to learn to adapt to the ever-changing market environment. Next up, we do have Euro USD. Now, we've got a different story on Euro USD. If you start on the monthly time frame, a massive equal low. I can see we had that massive liquidity run below this level over here. The market is starting the pullback, but the question is, how long is this pullback gonna hold on the weekly time frame? We do have the market last week breaking above this very strong level of resistance. That's level over here acted as resistance. Market broke above that, and it came back to test it as support, or it basically just opened up and tested it as support there as well. Now if you drop down on the daily time frame, what do we see? We can see how the market had printed an equal low, same price action we got on the Gbpusd. The market is also now stuck between these two levels over here. Now if I have to go with what I see over here, there is a high possibility, not high possibility, the market's going to pull back to this level. Then we could potentially see a continuation to the upside. That's just very important that you do monitor the price action once the market comes back to this level. That because, and then wait for the further confirmation to make sure that it is safe for you to get into this market. Next up, we do have Usd Jpy. Now because there is a direct correlation between the yen index and the dollar index, it's quite difficult to read this market, because we'd probably see a consolidation happening here on the lower time frame. We have this massive impulse on the weekly time frame. We also on the weekly, again, it's very difficult to read the structure. This market has been quite bullish, and unless we see some bearish momentum, should we be able to start looking for opportunity in here. You can see this market printed an overextended information. After an overextended information, you expect to pull back to the left leg, which is exactly what the market had done over here. But the market is now stuck between this strong level of support and this level of resistance. Now this level acted as support there, but below that came tested as resistance. Market also printed support over here, so there is no clear confirmation in which way this market's going to go until we get a clear break below, and then we can look for that continuation, or we get a break above that level and then we can look for that continuation there as well. Next up, we got another safe haven, which is the dollar index. Now I spoke about this last month when the market was sitting at this level, explaining all of the reasons why we can expect the market to continue lower, and that is exactly what the market had given us. Now if we drop down on the weekly time frame, what do we see? We have this massive impulse, we got a correction. If you look left, you can see the market printed this very important stocks over here. We're at that rejection, and the market is currently back at that level once again. There is a high expected unless we get a daily clear bullish momentum on this area over here. The market is currently testing a strong level of support over there, and once again the market at we can see the market also printed the stocks. So if I can just go like that again, we can see you know, the yen and the dollar index, they are both considered sorry, the yen and the index as well as the Swiss franc are considered safe haven. And you can see how this market is also starting to move sideways. A clear break below this level will give us a good opportunity to start looking for those sells to the downside. Alternatively, if we do get a break above this level, then we can also start looking for that. I'm more bullish on the dollar index because we expect the Federal Reserve to come in and continue to hike the interest rates as anticipated based off last week's Federal Reserve meeting when Powell came out and he said that inflation did not go as they hoped it would. CPI numbers was high, and we can expect the Feds to come in and hike the interest rates. Now I had a question from someone in the comment section yesterday asking me to do a breakdown on Eurnzd. So I'm going to look at this for you quickly. So on the monthly time frame, we have this massive impulse. That's not the way I wanted to start that. So on the monthly time frame, we have the confluence. The market broke. Oh my word. So on the monthly time frame, what do we see? Now firstly, the market printed this very strong structure over here. Broke below that, came to test it as resistance. We had a massive impulse. After that impulse, we had that correction. If you take your Fibonacci from the high to the low of the impulse, you'll probably get a 61.8 for here. Then we had that confluence 61.8 pullback. We can expect that continuation to the downside there as well. Now here on the weekly time frame, what do we see? Now firstly, we can see how the market had printed this level of support there. Broke below that, came to test it as resistance. The market also printed this level of resistance, and we can definitely expect the market to pull back and test it as support. Now if you drop down on the daily time frame, what do we see? Now here on the daily time frame, the price action is quite simple. The market had printed this information. After an information, you expect to pull back to the neckline, which is exactly what the market has given us. Now there's a high possibility that you can expect the market to melt down from exactly where it is now from a technical perspective. Alternatively, we could potentially see a deeper pullback there, and then you can go and expect this market to go and pull back to that level there as well. It's a long way down, you might think, but do you really think it's going to go that low? My friend, if there's nothing you know about me, if there's one thing you need to know about me is if I tell the market to go that way, it's going to go that way. So that is the update for the that is the weekly market breakdown for this week. I hope you guys have a productive week. I want to say thank you so much for the support on the channel. Thank you for your time, and as always, cheers for years.